It's a great read. It's an entertaining read. Time to go long the cron, as you say. But you know how the street often takes an upgrade, especially a double upgrade, with the stock at new highs. Why now?
Yeah, great question. The stock is up about 40% in the last couple of months, so we freely admit that we're a little bit late here. The last time I upgraded it in 2016, we were a little bit late too. Really what we're seeing is the beginning of an upturn in DRAM. Micron is about 70% DRAM. That's the memory that's in your computer and your cell phone and in servers. And the average upturn lasts about 2 years. The last two upturns have lasted 2 years. And really the stock has only been going up, even though it's up 40%, it's only been going up for the last 2 months. So for 2 months into a roughly 2-year upturn, we feel fine about the timing. It's not ideal. Again, the last time we upgraded, I think it was about 4.5 years ago, the stock was also up about 50% off the bottom. So we'd rather get these DRAM cycles right, just because that space is so volatile, especially given last year we had a bit of a double dip. Memory pricing went up over the summer, and then it crashed out again in September. Micron had a pretty bad quarter, so we don't want to run into one of those issues. And so we wanted to make sure that we were on the path to a sustainable upturn.
Right. So it's really the sustainability of the upturn, which you think could last at least a year and maybe 2?
Exactly. So in the note, we look at the last 2 upturns. Both of them lasted literally within a month of 2 years each. So if you look at DRAM pricing, it looks like it's going to go up this month or this quarter. And we think that it's the best supply-demand imbalance, i.e., not a lot of supply and a lot of demand, the best imbalance we've had in 3 years. So we really think that we're at the beginning of a very strong upturn here that could last at least a year, if not 2 years. And again, the last 2 upturns have lasted 2 years.
Christopher, hi, it's John Fort. Forgive me the Wednesday morning quarterbacking, but you had a $35 price target on this. That's around where it was at the March 2020 lows, pandemic induced there. And now you're doing this double upgrade, which is gutsy. What faked you out about Micron and the DRAM action in 2020, and what can we learn from it?
Sure. So, really the stock was, I think, the 3rd worst performing semiconductor name last year. And this is despite the 40% increase they had during the last couple of months. So it really wasn't a great year if you look at the entire year for Micron. I'll admit that I'm a little late, but like I said before, this is an extremely volatile space. Micron was making $4 a quarter in the last upturn, and it looks like they're going to make about 58 cents this quarter. So a very volatile space. And we wanted to make sure that once we upgraded, we had a bit of a sustainable upturn. So to be honest, I did not anticipate the investors discounting this upturn so quickly. Now, given the valuations in the market, they seem to be discounting about everything. But again, if we're 2 months into a 2-year upturn, at least a year, we think that it could go for 2 years. If we're 2 months into it, I'm okay with that. And again, the last time we upgraded back in 2016, the stock had a nice bounce off the bottom. We just want to make sure that we're in a sustainable upturn.
Shepard Smith here. Thanks for watching CNBC on YouTube.